Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting however with this important volume profile as well as a range. So this volume profile has played an important role in the bull market so far. It is a volume profile taken from this range over here, and the value area low acted as resistance, the value area high acted as resistance as well, and the point of control acted as support, after which we broke out. It is important for price to not fall back inside this range, as that would definitely increase the probabilities to move towards the lower end of the range at about 30k. So the support area here, where we have the value area high, is at 50.5k to 49k. And in some of the bullish scenarios, you will see from an Elliott Wave perspective why we do not want to reach this level preferably. Now, secondly, we have the channel here. This channel is taken from the low to the first time we hit 30k. You can see it's nicely respected, hit over here, the top line of the channel, then we hit the midline, and eventually we broke out. The higher trend line of this channel is currently in the current week sitting at about 57k, which can of course act as support as well. So if we then talk about the different bullish scenarios, and I have three of them. The first one is a double 1-2, then wave 3 is already finished, 4 over here in the making, and then we look for a normal wave 5 towards the upside. The common target for a wave 4 is between the 0.236 and the 0.5 Fibonacci, taken from the low of 2 to the high of wave 3, giving you a target area between 53.3k and 63.3k. The invalidation is the 0.618 at 49.3k, and that is in confluence with the high of this range. So if price would move towards the downside and hit the value area, hit the 618 over here, this scenario actually becomes invalidated. Because wave 1 and wave 3 are quite similar in length, we at least have to talk about the target for an extended wave 5, where wave 5 is going to be the biggest, highest volume structure of this impulse, and that then leads us to this scenario over here. So the 1-2 in yellow and the 1-2 in green, as well as the 3 and the 4, are exactly the same. It's just that this wave 5 has a much higher target. The target for this wave 5 is the 1.618 trend-based fib extension, taken from the low to the high of this wave 3 to the low of wave 4, giving you a target area above 300k, which of course is very far-fetched compared to where we are at the moment, but it is a target for an extended wave 5, and we only know if we're going to get an extended wave 5 if we actually break above 74k and have a look at the volume and see what happens next, because the third scenario, which also is a bullish scenario, is a triple 1-2, 1-2, 1-2, 1-2, and then continuation to the upside. Now, triple 1-2, especially on the higher time frames, is quite rare, so therefore it also affects the probabilities of this scenario. But what you can see here is that the previous wave 2s actually moved towards the upside after a bounce inside the 0.382 and the 0.236. Hence the reason I also got it here in blue on my chart. But actually the common target for a wave 2 is between the 0.5 and the 0.786. In other words, if price is going to retest the high of this volume profile, for example, then a 1, 2, 3, 4, 5 is invalidated, but we do have a potential 1, 2, 1, 2, 1, 2, and then we look for continuation to the upside in a much bigger wave 3. Of course, if price is finding support somewhere here, we still have the potential for a very big wave 3. And in this case, what we are still looking for is a massive impulse to the upside, where we also still look forward to a high amount of volume coming in. New highs, but an increasement in volume. And what you're going to be looking for is something like we had in 2020. So we have the blip over here, which could be compared to where we are at the moment, and then price is moving above the high, and then you can see that the volume is increasing, and that is something that we also want to see if price is moving to the upside, as then we can look for much higher targets. Now, if we then zoom in to the local structure on the 4-hour, then the bullish scenario is actually a regular flat where another low is not a crazy idea. So here we have a 3-wave A, 3-wave B, and we look for a 5-wave C to the downside. Common target for your wave B in a regular flat is the 0.9 Fibonacci, and then we're looking for an impulse to the downside, a 5-wave impulsive structure. The common target for your wave C is between the 1 and the 1.236 trend-based fib extension taken from the high to the low of A to the high of wave B. On some charts, this target area has already been hit. However, also on some other charts, like the chart that I have, this area is not yet hit. Now, the minimum requirement actually for a regular flat wave C is to move below the low of A, which on my chart is also not yet the case, while on others it is the case. So that's a little bit confusing, and therefore the local price action here is actually a lot more interesting to get an idea of, hey, are we going to make another low or are we going to move towards the upside? The extension target for this wave C is the 1.618, sitting at 51.6k. Now we do have some support to the downside. I mean, first of all, we are at support, which is the white box here, 61.8 to 62.9k. Of course, already giving a first reaction, after which we move to the upside and now down again. But it is support at the moment nonetheless. But below that area, we have this weekly gap here. So on the weekly time frame, price created a gap. And you can see that over here, we have the red candle, price moving to the upside, and then we have the low of this candle, and this is over here the weekly gap. So 59.2k is important support in confluence with the target area for that wave C. Commonly, if price is hitting this support, you would expect a bounce, at least a bounce towards the upside. But if you start to close daily candles in this area over here, it increases the probabilities to move towards the downside, fill the gap, and move to 53k, where we then have this weekly order block as well, and a bit of support in confluence with the 1.618 over here, the extension target for your wave C, which is sitting over here between 51.6k and 51.9k. Now inside this wave C, we are then looking for an impulsive structure to the downside, which means a 5-wave move. And this is the 5-wave move that we then keep an eye on. We have our wave 1, we have our wave 2. Then a 1, 2, 3, 4, 5 already finished in this particular scenario. Then we have our wave 4, and then we're looking for one more low in a wave 5. Now the invalidation for this wave 4 is the 0.618, which has not yet been touched. The 0.618 is taken from the high of 2 to the low of wave 3. Price did move above the 0.5 here, which can happen. It's not that common that a wave 4 moves above the 0.5 and starts ranging here for a couple of hours before continuing in a wave 5. So it of course does affect the probabilities a little bit, but we did not hit the invalidation for wave 4, and this is what you want to see, right? So we didn't hit it, and therefore this impulsive scenario is still a legit scenario where we're looking for a wave 5 towards the downside. If we then zoom in over here to the 15-minute time frame, then how we count this move towards the downside as an impulse is as follows. So first of all, we move towards the upside. We hit the 1-hour order block here, right, shown earlier today as well as in the video and the live stream. 1-hour order block, important resistance. The 618 is just above over here, and then we reject it. Now in this scenario, we are then looking for an impulse to the downside in a 1, 2, 1, 2, 3, 4, 5, potentially another 4 and another wave 5. After these 5 waves, we then look for a retracement and continuation to the downside, as again, we're looking for a wave 5, right? Either we go directly to the downside and take the lows, and this is the end, 1, 2, 3, 4, 5, perfectly fine, or you have a bigger 5-wave structure for a lower price target. So in this scenario, we actually want to see a bit of a range forming, preferably this wave 4 over here in blue, and then another drop towards the downside. If price is going to move towards the upside and hits the 0.618 here, it doesn't necessarily mean we go up in a straight line, because we still have this range as well. Now I realize again that on some other charts, price moved below wave A, which is an invalidation in a triangle, but on my chart it didn't, and some others as well. So it's still a scenario I at least want to cover, where we have A, B, C, D, and eventually a wave E. Of course, in this case, we want to hit the 0.618, move to the upside in a zigzag, right? 3-wave move in a wave D, or wave D can also be a double or even a triple zigzag, which are more complex structures. But we look for a move to the upside, then another 3-waver down, and then continuation to the upside. And the invalidations are very clear, because we first want to move up, not take the high of B, move down, not take the low of wave C, and then continuation to the upside. Now, if we go to the 15-minute and look at the most bullish scenario that we have over here, where the low is then in and we look for continuation, then we are looking for this move to be an impulsive structure towards the upside. And therefore, we can only think about an impulse, diagonal, or a double 1-2. So if this is the low and we are going to move up, we either want to see a 1, 2, 3, 4, 5. Well, this is clearly not the case because of all the overlap we have over here. Then we have a potential diagonal structure or a double 1-2. Now in a diagonal, we can have a diagonal where all of the waves are zigzag structures. So we then look for a diagonal like this, right? Where we have a ABC to the upside, ABC to the downside. Wave 2 and a wave 4 have to be a zigzag structure. So we're then looking for a wave 1, we're looking for a wave 2, but then we're looking for a wave 3, and this is where the challenge comes in, which I also explained in the live stream earlier today, is this over here has to be the low of your wave 2 in a diagonal. It can't be this low here, because in a zigzag wave C or in a double zigzag wave Y should go below this one, but it didn't. So therefore we have a 1 and a 2, and now we're looking for 3. Naturally, one would then expect this to be 3, this to be 4, and this to be 5. I mean, this is the only way we could potentially end a diagonal over here, right? But that then means that if this over here is the high of your wave 3, this has to be the low of your wave B, and then a wave A, wave B, and a wave C. Now it is quite challenging to actually finish a wave B over here after this corrective structure. It would make more sense to finish a B here, but in this scenario you prefer to finish a B here and then an A, B, C zigzag, because if this is the low of B and you count a 1, 2, 3, well, where is your 4, right? Your 2 is very long. If this is your wave 4, it's a very short wave 4 compared to a very long wave 2, which is quite uncommon, as more commonly a wave 4 is longer than a wave 2. So that doesn't work that nicely in this diagonal. Now, it's still a scenario we have to keep in mind, but if this is the high of your diagonal and this is the end of your wave 5, and therefore this is a higher degree wave 1 on the chart, right? We are now looking for a corrective structure to the downside in a wave 2, but wave 2 has to be a 3-wave structure to the downside, which means that this looks impulsive. We're still looking for a bounce and then another move towards the downside and then a zigzag, a wave A, B, and a wave C preferably. If we take a Fibonacci from the low to the high that we have and we toggle on the wave 2 targets, then currently we found support at the golden pocket. That's a normal target for a wave 2. The 0.786 is also a common target for a wave 2, but the 886 is rare. So if price would move down now and hit the 886, that would significantly reduce the probabilities for bullish upside. So this is a very important level, sitting at 61.5K. For the bullish scenario, we definitely want to see a bounce soon. If we then move to the higher time frames, once again to the weekly time frame, and look at the bearish scenario, then we are looking for a flat structure where eventually we want to see price move impulsively towards the downside. Here we have a 3-wave A to the downside, actually a 5-wave to be honest, WXYXZ, but it's a corrective structure in wave A. Then we have a 3-wave move towards the upside in wave B, and we're looking for a 5-wave move to the downside in C. Now for a flat, the most common flat is an expanding flat, where your wave B is moving up to the 1.236 to the 1.38 Fibonacci, taken from the high to the low of A, which is a target of 98K to 122K. The regular flat target is 69K to 74K, the 1 to the 105 taken from the same pivots over here, but a regular flat is less common than an expanding flat. Now in this wave C, we then want to see an impulse to the downside, where your common target for a regular flat is between the 1 and the 1.236 trend-based fib extension, taken from the high to the low to the current high that we have, giving you a target between 16.5K and 11.6K, with the extension target being the 1.618 at 6.5K. In this area, however, we do have important support. We have the golden pocket here, taken from the low to the high over here at 69K, in confluence with the value area high of this multi-year volume profile. So the area between 10 and 9K is incredible support for Bitcoin if it would move to the downside. Now at the moment, however, the probabilities for this scenario are lower compared to the bullish scenarios, right? A regular flat is less common, but also locally there are no clear signs for a bigger impulse to the downside in a wave C, because if we go to the 4-hour time frame, then what you see here is an impulse to the downside in a 1-2, and then we want to see a very big wave 3 to the downside, because don't forget, we need to have targets pretty much below 17k. So what we're looking for is a massive wave 3, where the minimum target for wave 3 should be the 1.618 at 51.6k, taken from the high to the low to the high over here. Now what reduces the probabilities for a strong impulse to the downside is, first of all, this move here counts better as a 3-wave structure compared to an impulse to the downside. As you can see, a normal 5-wave impulse doesn't work. If we count this as a diagonal, then wave 3 at the moment would be the shortest out of wave 1, 3, and 5, which isn't allowed, and a double or triple 1-2 is also invalidated as price moved up quite far. So it doesn't work nicely to count this as an impulse, works a bit better as a corrective structure. And more importantly even, price again hit the 886, taken from the high to the low of 1, and the 886, rare for a wave 2, common for a wave B or a wave X, increases probabilities that any move towards the downside is a wave C or a wave Y, which in turn increases probabilities that at a later stage price is going to reverse and move back towards the upside to take the high, and that is at the moment the highest probability. From a CVD perspective, there is not too much going on at the moment. Of course, if you go to the 50-minute, you will see bullish CVD divergences here, even though this low already had bullish CVD here, bullish CVD here, and even bullish CVD there. So I would prefer to look for local strength. Give me a range here, give me a bit of a bounce, and then a retracement and some local bullish CVD divergences. That is much more interesting than what we see with the low over here. So if we then look at the probabilities of the different scenarios, then on the weekly time frame, the probabilities at the moment are highest for a normal 5-wave impulsive structure, because an extended wave 5 is uncommon, but also a triple 1-2, especially on the weekly time frame, is not something that you see very often, right? So therefore it can't immediately have the highest probability. But if we do move up on very high volume and increasing volume, that's most important, we can look for very, very high targets. On number 3, we have the bear market, currently the lowest probability scenario, where we are expecting much lower prices. If we look at this range, then the bullish scenarios have the highest probability as well, where either we're looking for a flat, which means potentially another low over here with this arrow, as you can see, or immediate continuation. That really depends on the 0.618. If we don't take this low on my chart, we're going to be talking about a running flat or potentially the triangle, right, where we have a wave A, B, C, and they still look for a D as well as a wave E. But the 0.618 at 67.3k is very, very important to give more probabilities to bullish continuation or a sideways range, after which we expect continuation. But the probabilities decrease for price to take this low if it hits the 0.618 above. Of course, if it does hit the 0.618, we will be analyzing the chart at that moment in time, and we will observe how price moved towards that 0.618, right? And therefore, on the 15-minute time frame, so very, very locally, as price is moving to the downside, naturally, the probabilities at the moment are higher for this to be an impulse, a bearish impulse to the downside, right? Either in a wave 5 to end a wave C and we move to the upside. But if we can halt before this low, there might be the potential for a wave A, B, and a wave C for bullish continuation, or we have a wave 1, 2, and a 3 for bearish continuation. So just a 5-wave single impulse doesn't really tell us too much. It only shows us that it is unlikely that this is the only move we're going to get, because for the bullish scenario, you would still expect a 3-wave zigzag structure. And at the moment, this looks to be a single impulse to the downside, and an impulse always needs a partner leg as well. That being said, I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.